Welcome to this week's video. Today what I want to start with is a question that I got from a client asking me why interest rates went up when interest rates went down after the Fed cut the rate, the benchmark rate by a quarter of a point. And the reason why that happens, that you notice the phenomena that the Fed cuts the benchmark rate and then all of a sudden mortgage rates go up for a little bit, is because the interpretation that the Fed chair is giving and the interpretation that the market takes the information that he is giving. What happened this time is obviously we're in a shutdown, so we don't have the capacity, or the Fed doesn't have the capacity to get some of the data that it needs in order to make decisions. So therefore, Chairman Powell said there's going to be, or they might not be, emphasis in may not be, another cut in December because we won't have data. They're not going to have data from October, and they're not going to have, well, for what it looks like, we might not even have data for November. So if that is the case, they can't make a decision. And if they can make a decision, they're going to keep things as they are. What happens then is that the market reads that and assumes that there is going to be no cut. So then the assumption becomes real and the market reacts to it, right? And that, what it does, it pushes the treasuries up, actually the treasuries down, and then that creates a whole issue with the interest rates. So that is why when the Fed chairman speaks, you will have to see what is the interpretation of what he's giving. If he's saying after the cut that there's something positive is going to happen, then most likely rates are going to go down. That actually happened about a year and a half ago. Actually, it was a year ago in September when they cut the benchmark rate, and then rates went down considerably. But then follow-ups to those cuts, their interpretation of what was happening economically wasn't seen positive, which created the mortgage rates to go up again. That's the circumstance that we have now. So what you want to do is not just pay attention to the action, you want to pay more attention to the reaction, because that's where you're going to find why interest rates will go up or why interest rates will go down. So kind of like reading the tarot cards or reading the leaves, right? It's going to give us the idea of where we're going future-wise with mortgage rates. I don't think we're going to see another cut in December. I don't think the market believes it's going to get another cut in December. And if we continue in this path with the shutdown, well, it's going to be interesting to see what happens by next year. If you have any questions, don't hesitate to call me. My phone number 480-542-8890, 480-542-8890. Have a wonderful weekend.